Hello and welcome to the latest edition of Citrus Mortgage Bites from our offices in Sevenoaks. I'm joined today by Mortgage and Protection Advisor Holly Bettles. Welcome, Holly, and thank you for joining me. Holly, I'm going to get straight in today because it feels like I'm going to go back a couple of months, Bank of England base rate change to 5%. And go back even further, and there was lots of noise about the number of rate reductions that were going to happen this year, and they don't seem to have happened. So we've talked about those a bit before. So here we are at 5% after one rate reduction. And now we're looking forward to go, okay, what might be the next move by the Bank of England? So we've been reading a little bit over the last couple of weeks, and actually it seems a little bit gloomy based on the press that's there. So we're seeing Goldman Sachs, they're a massive kind of investment bank worth about $165 billion. They came out and said, actually, the UK base rate could be as low as 2.75 towards the end of next year, which was followed up by Santander saying, I think maybe 3.75, not 2.75. And then we actually had the governor of the Bank of England, Andrew Bailey, came out very recently and said, actually, inflation is dropping faster than expected in the UK. And I think the most recent CPI print for September, so the core inflation print for September, or just actually not core, the inflation print for September came out at 1.7%. So below the Bank of England guide of 2%. So that all seemed kind of relatively gloomy, which made me think, well, I know that there'd been a little bit of growth in the UK economy in Q2, so that was a positive. But when you took all of that, you went, wow, all of this talk about lower interest rates. So I'm assuming that you're about to tell me great news if you're a mortgage client and you're looking to kind of either move or remortgage, or you've got product transfer, looking at fixed rates, that those rates are coming down. Would I be right?
I'd like to say yes, Richard. Unfortunately, no. So you're absolutely right. People generally do tend to think that if the inflation has come down and everybody's saying, oh, great, the Bank of England base rate is going to lower, they assume that mortgage fixed rates will lower. Now, the reality of it is that if you're on a tracker or a discounted rate, yes, the Bank of England base rate dropping will definitely impact the rate that you pay on your mortgage, because those two types of mortgage products are linked to that Bank of England base rate. But the reality for fixed rates is, although quite often we do see a correlation between the two things, the fixed rates are more impacted by something called a swap rate. So where the bank is borrowing the money to then lend to the mortgage clients, the cost to the bank is then what impacts how much those fixed rates are. So where the swap rates start to do this, the yo-yo, so you looked at a swap rate graph and you could see it going up and down and up and down, then that's the reason why we're not seeing the correlation between the Bank of England base rate and the inflation rates being potentially lower or lower and fixed rates actually going up. Because my inbox at the moment in the last 2 weeks or so has been a slow ticking increase of fixed rates going upwards, not downwards.
Okay. That's helpful. Thank you for correcting me, first of all. So, and actually, it's interesting when you look at that graph, and as you say, you see the volatility in swap rates. So if I am a borrower or I'm about to become a borrower, and I'm looking at that graph for swap rates, and I'm reading kind of the media about Bank of England base rate, what do I do? Do I wait? Do I act? What's right for me to do now?
So I'm going to give the answer that I nearly always give on our mortgage fights because it is the right answer. But that is speak to your broker, because your broker will talk you through your specific circumstances. It might be best to wait. It might be best to hold off. It might absolutely not be best to wait and hold off. It will depend on your individual circumstances, your attitude to risk. The swap rates are impacted by so many different things that on a day-to-day basis we don't see or think about. So the news, inflation, budget, all those kinds of things that will impact the swap rates. And therefore, there are some people that can play the game of rate chasing and trying to catch the very best rate. But for a lot of people, it's making sure that they are tied into a product that they're comfortable they can afford to pay each month.
Okay, thank you. And you mentioned something there. You mentioned the B word, the budget word. It feels like a kind of been the longest in play budget ever. It's gone on for weeks and weeks and weeks in terms of the speculation. I've never seen so much speculation around what the Chancellor's going to announce at the end of October. So one of the things I have been reading about is stamp duty. So for viewers of Mortgage Bites, can you maybe just explain what is this kind of speculation around stamp duty and what might happen, please?
Yeah, no bother. So in 2022, they increased the nil rate ban threshold for stamp duty, which meant that you could buy at a higher purchase price and pay less stamp duty, essentially. So they did that to help the economy, help boost, house buying and all those things, and that helped both first-time buyers and home movers, essentially. So it wasn't kind of just for one person. So the benefit to that then obviously is that you pay less, but as of the 31st of March 2025, assuming nothing is announced and no changes are made between now and then, as it stands at the moment, then those nil-rate bans will be put back up. Which means if you're going to be buying property, you may not have been eligible to pay any stamp duty beforehand because of the purchase price and the fact that you still fell into the nil rate band. But from the 31st of March next year, you will pay stamp duty on it because it will then fall into the bracket where you're charged.
Okay. And I guess from that perspective, then just talk to me about pounds and pence. What might it mean?
So for first-time buyers, the nil rate band at the moment, as it stands today, is 425,000. That would drop down to 300,000. So any first-time buyers that are buying at £300,000 or over £300,000 purchase price, if they haven't completed by the 31st of March, they will then be liable for some stamp duty. They'll also be decreasing the maximum purchase price for first-time buyers from 625,000 to 500,000. So again, that just impacts those figures, and obviously just general home movers, where they're increasing the threshold or lowering the threshold, sorry, then it does mean that you're going to end up paying a little bit more. So as an example, if you were a first-time buyer looking to buy in the next kind of 6 months or so, if you are to complete, so get your keys, the whole thing's finished before 31st of March, and you were buying at 350, which is kind of an average price around where we are. So, for two-bedroom house, for example. So before the 31st of March completion would be no stamp duty. After the 31st of March completion, 2,500 stamp duty, which is a big difference for first-time buyers.
Wow. It's a lot of money. That's a lot of money, particularly at a time when no doubt people are looking very carefully at every penny, either because of the rate that they're choosing or, things like stamp duty, thousands of pounds. It's an exceptional amount of money. That's really helpful. Thank you for explaining that. It feels like, Holly, well, I know that once the budget information is announced, we're going to be doing a Citrus Bites. We're going to take a good look at what gets announced straight after the budget, actually, and get something out to everyone to confirm. But we will cover what is then mentioned about stamp duty, because clearly, if you are going to be impacted, is something you're going to be particularly interested in for your financials. So, Holly, listen, thank you so much for updating us on both swap rates and indeed stamp duty. Really appreciate it. And that's all for today. So, as I say, we will update you as soon as we know the budget information. We'll come out with further information, and we look forward to seeing you then. Until then, take care and bye for now.